So now they are getting a credit every year for research and development of systems, which came to that, which equates to them in almost six figures of a tax credit every single year. So it was kind of cool to see that come to fruition, and by just looking at one little quirk in the tax law that allows for it.
Welcome back to CSI Accounting, your one-stop shop for all your financial and small business-related questions. Today, I'm going to be talking to our very own Bryan Cremeen, who's not only an accountant at CSI, but he actually manages the entire accounting department. Bryan used to own his own accounting firm back in the day before selling to CSI, so you can imagine he's really an expert in the accounting and tax world. I wanted to pick his brain today and ask him some questions that are going to help you small business owners out there. So without further ado, let's go hear some of the insights that he has to offer. All right, Bryan, give me 3 financial metrics every small business owner needs to know.
Oh man, number one is cash. You got to know how much cash you have in the bank, how much cash is going out the door. Time and time again, the number one thing that bankers look at, and the number one thing that other individuals look at, is what does your cash situation look like? Are you overdrawing on your bank account? Are you able to pay your bills? Number 2, I'd say, is gross profit. Knowing what the direct costs are for your business in order to make a dollar, right? And making sure those are in line with your industry. And the third one I'd look at is, what are your liabilities out there? How much in loans do you have versus how much money are you bringing in? Are you able to cover that debt? So many companies I see go out there and they secure building their company with debt. And sometimes they overextend that, and that creates challenges. So I think that's probably the third most important KPI to watch.
What are some common mistakes you see small businesses make?
The biggest one is they're trying to track too much to a very minute detail. So I think trying to track too much information on your financial statements is a detriment to small businesses. The KISS principle comes into full effect there. So you'll see people want to track automobiles, right? But instead of tracking automobiles, they want to track the gas and the maintenance and the oil changes. Now you got 6 or 7 categories under auto expense, for an example. When in the grand scheme of things, does that really make a difference for your business? Why not just track your overall auto expense? People are trying to track insurance, in 4 or 5 different categories. Track insurance. Know what your costs are from a general perspective. You can always drill in and find out more detail, but if you start with too much detail, you get lost in it. Keep it very simple,
So what's the best way to know all of the tax deductions that your business qualifies for?
That's a good question. It's really hard to, there's, 100 pages of tax law that are created every year, and trying to track and chase that down is really difficult for an individual or a small business owner to do. I think the best way they can find out what they're available for is have somebody that they know and they trust that is involved in the tax industry, right? Because the tax professionals are going through a certain amount of continuing education every year. We do 4 full days of education here, 2 days on small businesses, 2 days on individuals, to track all the new tax laws. So knowing somebody in the industry and trusting them is the best way to find a deduction.
How should you go about financial forecasting for a small business?
I think it's important for every business to know where they're going or where they want to go. And so whether that financial forecast is something written on a piece of paper or something formal and, a document and tracked, I think it's important to understand where you want to be as a business, a year from now, 2 years from now, 5 years from now, and then tracking that progress against what you want to do to see where you need to make changes. So if you're looking to grow over the next 5 years and double your business, you want to track that to see if you really did accomplish that, right? And if you're on track to accomplish that. And if you're not on track to accomplish it, does the financial forecast need to be adjusted? Or do you need to adjust some of your business processes to meet that goal?
How do accounting needs change as a business grows?
Oh, good question. There's, when you're just starting out as a new business, you're most likely trying to find a way to grow the business quick. So you're pouring a lot of money and investment into marketing or getting out there and talking to individuals. And that requires capital. And so early on, a lot of businesses are trying to secure capital for their business. As they continue to grow, capital, although is still a concern, becomes less of an issue because banks are more willing to lend to established businesses. So then it becomes, okay, how do I maintain my growth, right? And then when you hit a certain size, kind of that breaking point in business, it's when do I hire my next employee, or what employee do I hire next? And so the different stages, have different needs. But all of those needs come together in knowing that, you can't just sit and watch a business grow. You have to be active in making that business grow, because there's always a decision that has to be made. And it's different every time. It's never the same.
What's a creative accounting hack you've seen?
Yeah, this one was a fun one for me, because it was a company I used to work at, and they when I went out on my own, they became one of my clients, and it was really cool to kind of see that. But it was a learning process for me too. They had come to me and said, we design systems, and but we have to put a lot of effort into figuring out how that system works, and is it the right system for our clients, and so forth. And I thought, okay, well, there's a credit out there called the research and development credit, but that's usually when you research and develop a product. So I went back and did some research on it, and I found, well, really what they're doing is they're taking existing products and building it into a system, and they're designing it. So, hey, why doesn't this qualify for a research and development credit? So we took it to one of our third-party vendors that we partner with on R&D credits and talked to them about it. And they said, hey, you know what? That's a great idea. I think this qualifies, and we'll make sure that they can get the credit for it. So now they are getting a credit every year for research and development of systems, which came to that, which equates to them in almost 6 figures of a tax credit every single year. So it was kind of cool to see that come to fruition, and by just looking at one little quirk in the tax law that allows for it.
Okay, give me one piece of financial wisdom for all small business owners.
Oh, one piece of financial wisdom. I would say, take your time. Take your time. Don't be so eager to grow, expand, to go outside of the norms just to make a point, right? Be measured in what you do. You can be aggressive. Go outside of your comfort zone a little bit, but don't go so far outside of your comfort zone you don't know how to recover. Try different things, but don't put all your eggs in one basket. Don't jump 100% into something that you're not sure is going to be successful. Because if you're not sure it's going to be successful, you may not be able to recover and be able to fall back on something if it doesn't work out. I think we do a really good job here of making sure people understand their risk. Risk is not bad, but risk that is a little bit reckless is bad. I've seen people build a business and then pivot their entire business overnight to something totally outside of the of what they were doing, and 6 months later they're gone because they made a shift based on something they heard on the radio or on TV, instead of focusing on, this is what we do and we're really good at this, and we can dabble in something different to see if it'll be successful, but let's not throw all our eggs in that basket. Being diversified is really important for a business owner, and diversified in your business, not relying on one customer to produce all your income, not relying on one product line to sustain you guys for the long term. Those are good base. That's a good base to have, but you need to make sure you're expanding out beyond.
All right, and there you have it, folks. Really valuable stuff here from Bryan today. But remember, no financial or small business advice is one size fits all. That's where having an accounting professional at your side comes in. Having an accountant at your side means that you're always going to be making the best possible financial decisions at all times, so you can sleep easy at night knowing that you're in good hands. If you found this information helpful, that's awesome. Like this video and subscribe to our channel for even more. But if you think you're ready to have an accountant at your side for your small business, check out our website linked in the description below. You can learn everything you need to know about our services, and you can always reach out to one of our consultants to get started. Thanks for watching. See you next time.